500.
Good morning, everyone. Welcome to this digital accountancy show webinar. Really pleased it's in collaboration with Capitalise today. Thank you for being with us. Just before we get started, just some housekeeping tips from me before we get going. The webinar today is going to last around 45 minutes. There is a chat box and Q&A session Q&A box in the control panel on the right hand side of your screen. As we go through today's webinar, if you do have any questions, please fire those in there and we'll do our best to answer them as we go. Today's webinar is being recorded, so if you would like to share this with members of the team or would like to go through a rerun of the webinar, please do let me know after the webinar and we will forward that out to you. And for the best possible sound and webinar experience, it actually helps if you close down all your other applications and tabs. Just helps with the lagging and echoing, and hopefully you'll get a much better experience. So my name is Dan Cockerton. I'm one of the directors here at the Digital Accountancy Show. Really pleased to say that the show in March, we're now over 2,500 accountants registered, which is really great, and we're really pleased with. We were down at the venue yesterday at the new Tottenham Hotspur Stadium. It's looking incredible, and we've just began to announce our speakers for the show as well. And I'm actually really pleased to announce that we've just had a confirmed this week the UK Managing Director of Tesla speak at the event. So that's going to hopefully go down really well. But just coming back to the show and the purpose behind us running the event, the magazine that we launched last week, and the purpose for us doing these webinars. In my time in the profession, which is nearly 10 years now, I've spent many a day on the road with accountants up and down the country, and also I've spent some time with some really great software and technology companies in the marketplace. And really our purpose as a company is to try and bridge the gap between forward-thinking accountancy firms that want to move to that next level, want to grow as a business, and ultimately want to add value to their clients, and bridge that gap between the really quite awesome technology companies that I have relationships with and that we know as a business. Some of the technology now is really groundbreaking, and the way it's evolving in the industry is growing at a rapid rate of knots. So I'm delighted to welcome on this webinar today Ollie Cummings, Commercial Director from Capitalise, and Joe Lennon from Wellers. Hi, chaps.
Hey, how you doing?
Hello.
Hi, Joe. Hi, Ollie. Ollie, shall we, before I kind of just pick up on kind of just introducing the webinar, do you guys want to kind of give a quick introduction to yourselves?
Sure. Okay. So I'm Ollie Cummings, Commercial Director of Capitalise. I've been here pretty much from the start. I'm an ex-accountant myself, working in the corporate finance. And yeah, so we've been building Capitalise now for 4 or 5 years, with a great client and a wonderful firm from Wellers. Joe's come to kind of say hello, so I'll introduce him.
Yeah, so I'm Joe Lennon. I'm a partner at Wellers. We're a 4-office accountancy firm working in general practice. I'm partner in the London office. We work across pretty much all sectors, but we do specialise in London particularly in leisure and hospitality.
Great stuff. Thanks, gents. Really pleased to have you on the webinar this morning. I think it's fair to say that technology is changing the world of finance completely in a number of areas, and none more so than raising finance itself. Just to the people on the call, if I take you back, or still to this day, imagining the quite painful process and time-consuming process it may take for a client to have a meeting with the bank, go through all the paperwork, get the documents together, and then may take a number of weeks for that application to go through, and then actually get the finance when the client needs it. Technology has completely changed all of that, and it's something that I actually feel very passionate about, as the impact it can have on SMEs and the business owners themselves can be absolutely enormous. And as we know, businesses may need finance for a number of reasons. It might be to plug a cash flow gap if something hasn't quite gone to plan, or to pay some tax even, or it may be on the flip side of that, it may be needed to grow the business, whether to buy an asset or to open another restaurant or another office. So the technology really enables us and our clients to access the finance when we need it. And the great thing with Capitalise, it allows us to kind of, without kind of stealing too much of Ollie's thunder, kind of look at the marketplace and look at the best options for our clients. So I'm really pleased that the webinar today, Ollie and Joe will give us a snapshot into how using a product like Capitalise can really benefit our clients, and ultimately how it can benefit our accountancy practices as well. So without further ado, I will just pass you over to Ollie to take you through his part of the presentation.
Great, thank you very much. Okay, thank you. So what we'll do now is I'll go through a kind of a quick overview of kind of why Capitalise came about, and what we do. And then we'll have a kind of Q&A with Joe, talking about kind of real life example, because it's all very well me talking about what Capitalise does, but it's as a firm that's actually built a funding team within Wellers, it'd be really interesting to kind of have a Q&A and ask kind of how that went and the hurdles and kind of also the successes as well. So first, I'll take you on a bit of a kind of 10-minute guide through Capitalise, and then we'll have some questions. And please feel free to also ask questions through this. So Capitalise, and it's all about doing more than refer. So Capitalise was founded in kind of 2016, and we've actually done nearly 2 million of lending so far to UK SMEs. We've got 40 employees. Last year we raised our Series A of 3.5 million from a great US investor called QED, and we currently have 1,600 practices using us. So we actually also won at Accounting Excellence last year. Our founder and chief product officer won kind of innovator of the year. So it's all going. We had a great year last year with Capitalise. So why are we here? So as an accountant, when I was in the corporate finance team, what I realized was that we could do insolvency as a firm, we could do corporate finance as a firm, but what we didn't really have any expertise was in the middle. We didn't know how to do, we didn't really have the contacts or to do the day-to-day kind of working capital and asset finance for our clients. What we all did is we all just introduced those particular companies just straight to the bank. And that was the key reason that we didn't really take a look at that middle ground, was because it was pretty much just the bank's territory. And whenever a client said to us they needed an overdraft or a loan, or some form of commercial mortgage or anything like that, we just said, oh great, let's go and speak to your bank. But there is a new era of banking that is now here. And so since the credit crunch 2008, banks actually only really started to come back to the lending market properly in about 2012. And they actually came back as secured lenders, very much wanting some form of key asset in the business, And that was because of their credit rate, the capital ratios that they had to adhere to. Also, their models were quite cost inefficient. And so what they've been doing since then is they've been trying to make their business models more efficient. And in that process, they've actually been reducing the amount of bank branches. And so they've actually reduced the amount of bank branches by 15,000 in the last 15 years. And that's actually probably up around 16, 17,000 at the moment, because they're kind of being taken out of the market all the time. And we estimate that 55,000 bank managers have actually gone in that period. What that means is the day-to-day interaction with your bank has kind of changing quite dramatically. So if you had a business that had at least 500,000 worth of revenue, you pretty much could go to your local bank branch, have a nice chat with your bank manager, and that's how you'd get a lot of your lending done. Typically now, you'd have to have at least 3-4 million of revenue to actually have a bank manager. And then actually that bank manager would be using kind of computer systems within the firm, because those banks have now returned and are lending to the general SME market, but they're very much lending as digital lenders, which means there's in-house underwriting systems that all the bank managers are using. So actually, there really has been a move from the high street banking to an online banking experience. And alongside that, when the banks left the market, they didn't leave it entirely, but they did very much move to secured, and then they took a few years to catch up, coming in with their digital products. The fintech market was growing rapidly at that time, and actually very much moved their eye to lending. And you went from, in 2001, you could, as a firm, you could maybe know 5-10 lenders, and you could pretty much have the market covered by having the main banks, maybe Bibby, Close, Ultimate, and that's, you could, and presumably Hitachi as well, and that was you done. And then it went to 300 plus lenders, so all kinds of lenders appeared. One of the net new lender in the market at the moment is Funding Circle, and they didn't even exist in 2008. And so it shows you there's been such a, last 10 years, there's been such a rapid change in lending. And a really interesting piece there is all those lenders are now actually commercially driven models looking to lend to as many people as they can. So it's become a real paradox of choice and very hard to navigate for the SMEs, because they go onto Google and they're like, well, where do I actually go? Who's the best person for me? The lenders are going to call them and just really make sure that they make themselves the right lender, because ultimately a successful lender needs to grow their book by finding the right client and lending to them. So actually there is almost a need of some form of advisor or expert in that situation, because it's become very hard to navigate. And just to add to that is the business owner's behavior doesn't always work in their favor. So if you look at the SME market, there's 5.5, about 5.7 now UK businesses. Actually, 80% of them are profitable, and about 80% of them don't hold more than 10 to 14 grand of cash at any one time. So they're actually walking a line of the payments coming in and out. And just to add to that, only 40% of them actually do management accounts of any kind. What that means is they're living in the day-to-day as they run their business, which is very similar to how someone would run their own personal accounts. Not everyone's got spreadsheets trying to work out whether their bills are coming in and how they're going to do what they need to save. And a lot of the SMEs actually run their businesses like that. So that makes them quite fragile. And what that results in is most lending at the moment is happening within 7 days of the inquiry, because the businesses come to the lenders and come to the market when they need the money, not when they forecast they need the money, when there's actually a hurdle in their business right now that needs more cash. And they typically only search for 1 hour, and 80% of them don't actually go to much of the broader market. So there really is a place for someone else being involved in this situation. So just to highlight that, the bank managers are kind of leaving the market and changing what they do, and they were one of the key advisors in the funding piece. The lending choice is now overwhelming. They're building up every day. We've just placed a large secured line with a brand new lender who's just come to market, and that's someone, they've only been in the market for 6 months, and they're part of a growing new group of lenders at the moment. And business owners' choices don't always work for themselves, and they are sometimes not making the correct decisions in what type of lender to go to. So the question is we believe that there is now a gap in the market for who should be the person advising and helping with the day-to-day lending of a business. So if you think about the day-to-day lending of a business, you've got two key types of businesses that are looking for lending. You've got the one business that is just wanting a resilient balance sheet, and they're actually sometimes struggling with their VAT. They're always concerned about their kind of end of month payments like staff costs, etc. And they're always in need of some form of funding, and they can be quite urgent need. They could have a late payment from one of their invoices, and suddenly they're in dire need of some kind of urgent funding. So they've got these people. You also got another set of firms, clients that are actually looking to grow, and they're looking for the best option to grow their business. They might not be in the equity space. Most businesses aren't really going to get equity market. It's a very competitive space to get equity funding. Most are looking for good, solid debt to get into their business, to grow their business. And what we believe is it's actually those two types of businesses are very much in the space of the accountancy firm, where they're helping with the kind of beyond compliance piece, so the kind of advisory piece, doing the cash flow forecasting, helping with their POA and things like that. They, as an accountant, you should be aware of when clients are looking for those types of funding. And now there's no one else in the market to help. It's a really great opportunity to jump in and help that client. So why Capitalise? You're our client. We work with the accountant directly. We help you build a funding team within your firm that becomes the point of access to your clients. And then we use our own expertise in-house and our technology, plus 106 at the moment lenders. Within that 106, you've got the core banks, such as Barclays, Lloyds, NatWest. You've also got the kind of Metro, Hitachi kind of group in the independents of Bibi, etc. And then you've got this very long tail of fintech providers. It starts with kind of Market Invoice, Funding Circle, and iWalker, and then goes on to all their competitors. And in just one search on our platform, you have complete access to all those firms. And so we cover all types of debt. That includes trade finance, asset finance, secured property lending, unsecured working capital or just unsecured loans, merchant cash advance, and all your forms of invoice finance. What that means is we cover all the areas of the debt space. So you can be a kind of one-stop shop for whatever lending requirements you have in your clients. Do more than refer, build a service line. We really believe that the best way to do this is to kind of take ownership of your clients' funding needs, and that really can, one, help grow a different new service line within your firm, and two, we just had a couple of lenders in yesterday, and interesting thing they said to us is they just love when they know the lead, as they would call it, is coming from Capitalise, because they know there's an accountant involved, and they know that this is a properly sourced business, and actually they have a much higher level of confidence that all the numbers and everything that they're going to see is going to be well worked because the accountant is involved. And that actually we found is 4 times more likely to be successful in funding when we send something that is very much with the accountant, rather than if it's actually someone coming directly into the lender. So you're actually helping your firms get the appropriate lending, one, by having the long-term vision with your client, that you're looking to grow your client and you're not looking to do a quick transaction. And that's a great way of entering the lending space, because you're looking at what are the steps over the next 5 years that we need to do to get this client to grow, to get this client out of the kind of tricky situation they're in, or just to get this client for some form of transaction. So it's really great to get the accountant involved. We can show you this at another time, but what happens is you log on to the platform and you can use, and it becomes like almost a CRM for your client's lending. And we have an app, which means you can go around your firm and look for whenever you're having a conversation with your client, any of your clients, and funding comes up, you can quickly log that in, and that will pop up in your funding team's dashboard. And we've trained the funding team via face-to-face training and online training to understand exactly what to do, and they really take ownership of that, and then that helps the client get to their required goals. Cool. So we work with lots of great accountants, including Wellers, and really that's what we do. But I suppose more importantly for us is let's talk about in practice. So I suppose this would be a great time to bring in Joe, and I think Dan's got some questions, because we'd much rather see it from your point of view than myself talking about this, because it's really great to be with one of our clients who's really successfully onboarded Capitalise, and they can truly do now have a funding team internally, and it's not been the smoothest ride. It's been up and down, and then with the end goal has been such a great thing, and it's a really good example to show the kind of what happens in the process, because there is some change that will have to happen in a firm to get to this point, and we've worked and built what we call the playbook that really helps a firm get from where they are now all the way to a fully successful funding team, and really something that they can see as a USP in their practice. Cool.
Brilliant. Thanks so much for that, Ollie. Really great insight into Capitalise as a product. Welcome, Joe. Welcome to the webinar. Joe, can I just kind of take you back to kind of how you guys initially got engaged with Capitalise, and what were your kind of core, what was the catalyst to really get you guys moving in the first place with Capitalise?
Yeah, sure. So I think, well, first of all, Ollie reached out to us. At the time, our offices were a sort of stone's throw away from each other. So
very convenient.
Yeah, there were some logistics that were good, but it happened at a very opportune time, to be honest, because I was dealing with a client at that point in time who was actually looking for financing, and they'd sort of tasked me with that, given everything that Ollie's just talked about with the banks and the specific requirements of the client. Going to a high street lender wasn't going to be an option, so I was sort of scouring the market myself, and experiencing the pain of doing so. So when Ollie came in and talked Capitalise through with us, to be honest, it was a bit of a no-brainer, because
Great.
I was, effectively feeling the pain that the clients do without, when there isn't one central place just to go to. It is a confusing landscape.
Okay, great. So it really came about from a client's situation at the time, in a combination with meeting Ollie at the right time. And then I'm suppose that you guys saw some of the benefits to that relatively quickly and thought, actually, we need to probably do more with this as a kind of partnership level and adding value to clients, and explored that partnership a bit deeper. What were kind of the next steps in terms of that relationship with Capitalise, and what sort of help did they give you in terms of meeting your goals and what you wanted to do with the product in the business?
Yeah, so I think going back to the first bit of the statement you just made, I mean, I think as an accountancy firm, and I think any accountancy firm needs to probably do this, is, it's all about the value add. I think, anyone can prepare a set of accounts, but being able to almost be a one-stop shop was very appealing to us, and it ties in with our ethos anyway. So once we understood the product, it was a no-brainer. In terms of the onboarding process, I think the toughest thing in a partnership of 13 partners, especially so we're split in between 4 offices, is getting buy-in across the board, and actually understanding what being bought into it means, because it's all very well having access to this platform, but unless you actually educate people properly, the way it's used can be a bit haphazard. So Capitalise were, great at coming in and doing face-to-face training sessions, online training, helping. So I've sat with someone from Capitalise and we've talked through logically who the funding team should be, because actually I think that's quite key, and knowing at what level that should be. I think that's probably going to be slightly different in every practice, but getting that right is a good first step, and they were there for every kind of step of the way to make sure we got that right. And then provided, like I said, face-to-face training and online training for those funding teams, so that they know exactly how to use the platform.
Okay, great. And are those the people that are in the funding team now, Joe? Are they kind of full time on that, or are they doing other roles as well?
So where we're a general practice and we're not departmentalized, so everyone does a bit of everything.
Okay.
So in our case, it made sense for the client managers who are, managing a portfolio of clients and providing a mixed range of services. It made sense for those to be our funding managers, so that there's not too much burden on one person. It's just become a part of the client manager job role, if that makes sense.
And a bit from me there is, and that's really important for us at Capitalise, is we're helping a firm go through a piece of change to build a new service line. But actually, the people that have the clients and have the portfolios are always, well, not always, but are mostly deemed as the most appropriate people to be in the funding team. And one of the things I always like to say is everyone in the funding team has to be able to at least have the confidence to challenge a partner. So, when the partner says there's one of the clients looking for funding, everyone in that team has got to be kind of, the rising stars in the firm who are really looking to kind of own this, and will like not create blockages, and actually will help the clients. And that can be really important in the rollout of Capitalise.
Okay, great. Thanks so much, Ollie. In terms of like how you guys do roll this out, Joe, I've seen a lot of firms where they are engaged with companies similar to Capitalise or have a kind of a provider that they're working with, but actually they're working with it on a more reactive process. So the client will come to them and say, Joe, I've got this problem, or we're experiencing some cash difficulties at the moment. How are you guys? How does the engagement between Wellers and the clients look when talking about a product like Capitalise?
I think, that's actually something that we spent quite a bit of time thinking about. Obviously, we don't ever want to be reactive to issues that our clients are facing. So I think, our early engagement, to be honest, it probably was reactive. We have a client meeting and they say, actually, we might be looking to borrow. We would then suggest, well, look, let's run it through the Capitalise platform and see what comes out the end of it. We, quickly realised that actually that isn't always the best way. When someone wants funding very quickly, you don't necessarily have the time and headspace, I suppose, to assess the market and make the most or the best decision. So we have, we do, just little things. So the Capitalise logo is on our website. If you click on it, it goes through to a blog post or a landing page about how we assist with financing for our clients. And there's a large part and some wording on there about Capitalise and how we work with Capitalise and what Capitalise is. And it's also, culturally, it's become part of our internal client management meetings. So if we're, periodically through the year, we will sit down, each client manager will sit down with a partner and a partner who doesn't work on the client to, have a bit of a brainstorm about how we can better be servicing those clients, and actually talking about funding requirements, or even, not necessarily new funding, but refinancing as well has become part of that. So I think, whilst it's it's a bit of it will always be a bit of a slow burn, because, we've been working with Capitalise about a year. That fundamentally is a bit of a change of culture, so it does take time to bed in, but that's largely how we've gone about it.
Okay, great. So you guys are marketing the service out to clients, which is great. Does it help you win new clients, would you say?
I think when you're talking to a client or a potential client, sorry, I think it's absolutely it's an impressive thing to be able to talk about, especially if the client has maybe spoken to a high street bank, has come to the conclusion that they're not going to be able to borrow, and is therefore talking about doing an equity raise and perhaps giving up some of the control of their company. And actually, if you're able to illustrate to them that you might not have to do that, or you could borrow and then do that later down the line when the company will be worth more and you'll be less diluted, I think that is, maybe impressive is the wrong word, but I think it does demonstrate an understanding of the market that possibly does set you aside from other accountants.
Yeah, absolutely. And I would say to that, when we're in front of clients, it's potential clients, it's about painting a picture, I would say, to some degree. And part of that, and I know, talking from experience, when looking for accountants, you want to be working with accountants that are up to date on technology, can offer the latest services, that can help you as a business ultimately. And Capitalise absolutely fits into one of those. Are you able to share, Joe, maybe one or two examples where Capitalise has helped out a client?
Yeah, sure. Client that I work with, they had, this actually, maybe it's not the best example because actually it was a little bit reactive, but there was no rush to find funding. So in that sense, it's part of a bigger strategy, but they'd been approached by a current or a sort of offshoot of someone they had already borrowed from and been given an indicative quote. And they were, for all intents and purposes, pretty much going to go with that. And I think the lending cost was coming in at about 8%. So off the back of a meeting that we were having, we said, let's run it, let's put this through the platform and see where we get to. And we basically ended up being able to get them, the same amount of money. I think it was 3.7%. And not only that, it was turned around within a week, and that was, all paperwork done and money in the account. So I think, that whilst that was somewhat reactive, I think it does illustrate that, had we not had that conversation at all, or been able to respond to the conversation in the way that we were, they'd have ended up with a much more expensive product, and then, the cash flow impact on that would have been negative.
And it highlights that client behavior that we were talking about, where SMEs do typically just take the first thing that they're given because they think they may not have as many options as they do. So what's great about that situation is we went to a wider audience and we found a better option.
Okay, great. That sounds really good. And what, from your point of view, Joe?
Yeah.
Talking from experience and dealing with the banks, fairly painful process.
Mm-hmm.
How smooth is the application process through Capitalise?
Oh, it's incredibly intuitive and easy. It couldn't really be any more straightforward. You
have to get that quote on our website.
The starting point is to put information in that's on public records, just from Companies House, really, company number, name, etc. And the more you go through, the more you go through, you get an indicative idea as to what kind of lender that might be able to help. And then through the dashboard, there's just an area where you upload certain information, and you kind of go from there. But to be honest with you, the more we've worked with Capitalise, we will always ring, normally if we've got something that, might be a little bit contentious or maybe not completely straightforward, we'll always ring and talk that through with someone at Capitalise first. And there's always someone that's able to give you the time to talk it through. And the good thing with that is that straight away you can be given a kind of baseline understanding, an indication of what kind of lender and what kind of rate you might be looking at based on client credit rating and if they're a homeowner and one thing and another, which you can then use to feed back to the client first, so that you're not sort of wasting anyone's time, if that makes sense.
Yeah, perfect sense. Perfect sense. And am I right in thinking, Ollie, that Capitalise is integrated with some of the other software vendors?
Yeah, we do, and that helps in the selection criteria. There is one problem with a lot of this software is actually most of the lenders at this very moment in the market are looking for originals to make their underwriting decisions. So while we can do that, we still have to take originals, and we make that very easy, just a drag and drop process on the platform, and that's where a lot of the underwriting decisions happen.
Okay. And in terms of like the likes of the bookkeeping products like Xero, QuickBooks, you guys can you're integrated with those bookkeeping products so the information feeds through?
Yes. So the information feeds through to help with the kind of decision making on our side, and at the moment we're working kind of more closely with them to see whether we can get to more automated offers. The problem there is when you go automated and when you do finance the click of a button, you can only go to the most high-tech lenders. And the great thing about our platform is we've got the banks, we've got all the independents, and then a load of the fintech lenders. So the kind of very much click of the button lending at this moment puts you into a slightly lower tier of lending. So a lot of the time we're actually helping the process go to the highest tier possible, and sometimes that will be one click button versus someone who has a slightly slower underwriting process. And
right, okay,
very closely with all the lenders to, we kind of shield that process from our clients as the accountants, and we hope as we go along, we're working very closely with actually all the banks and all the cloud trial balance providers, and hopefully we will get to the point where at a certain size of lending it will be very much kind of almost instant.
Okay, great. I've had a couple of questions come in, if I can fire them at you guys. The first one's coming from James. Hi, James. Ollie, probably more tailored towards yourself. James has asked, Ollie, can you give us a bit more insight into the 30% commission or what that might typically look like?
Sure. Okay, so when you set up a funding team with us, we share when one of your clients is successful getting money, we get a commission from the lender, so it's not added any cost to the client. We share 30% of that back with the accountancy firm. What you as the accountancy firm must do is just make sure the client is aware that you could receive that. But we go a bit further than that in the sense that we recommend and help and guide you through charging a client for the funding process, because actually if you charge up front, that one works far more with the kind of the fixed fee model that's coming in and the kind of helping make a kind of clear, kind of transparent charging structure. And then what happens there is some of our clients actually take the commission, and it's all part of building a kind of revenue stream within their business. Some charge and have a success fee and then give the commission back to their client. So actually we've got a few different charging structures that different firms use, and that we help people and we guide you through to the choice that's most effective for your firm. But the ultimate thing here is actually starting to bring funding into your practice could become as well as helping with your clients, you could actually make revenue out of it. But more importantly, the biggest value add we've found that we've come into is once you've put a 200 grand working capital loan to one of your clients, there's a very good time to ask them whether they should do some budgeting and some forecasting. And actually the bringing of lending and the finding a client that's looking for lending is a perfect way to then upsell your kind of your other products in your kind of advisory practice.
Okay, great. Thanks for that, Ollie. I've just got a question here from Neil. Looking at the list of accountancy partners, presumably some of them have corporate finance teams. How does Capitalise work in tandem with an existing team of specialist fundraisers?
Cool. Well, that's straight to the heart of the reason why we started Capitalise. I was from corporate finance. So what happens is there's a point in your corporate finance team where you're not really doing debt advisory anymore or transaction advisory. There'll be a certain size. So if you think the typical loan that goes through Capitalise is between, say, 50k and say 400k, we obviously can do all the way down to almost $1,000 and all the way up into the millions. But that's the kind of typical size that a UK SME is looking for. And so if you realistically look to your corporate finance team, they are probably looking for slightly larger transactions, and they're looking to do more structured pieces of lending and then equity. And so what we do is we actually bridge the gap between the corporate finance team and the outsourcing and business services team, where they kind of agree on a level where something is actually can be done within the outsourcing and services team, and something should be done with the corporate finance team. So we actually work more closely with the business services team, but a lot of our funding teams, particularly in larger firms, will have a person in the corporate finance team just looking for, just seeing if they can help, and then whether there's kind of, I suppose, opportunities for the corporate finance team at the kind of size of lending that we're helping with. So actually we work really well with lots of corporate finance teams.
Okay, great. Thanks, Ollie. I've had another question come in here. Is there a membership fee for Capitalise, or is it free to use?
Yes, there is a membership fee. So to build a 5-person team is about £300 a month. To build just, and that's for a firm, we would say, with at least 1,000 clients. And then actually, as you build more, you'll want more teams, and we can talk about that. And then also, if you're kind of under 1,000 clients and you're just looking to get funding into your practice, there is a partner subscription that's £150, and that's just for 2 people to have access to the platform. So yes.
Great, thanks, Ollie. Okay, great. I've had a question come in here from Sean. Hi, Sean. How long does the training take?
So the training takes, particularly if you're building a full funding team, it's an hour and a half online, and then 2 to 2.5 hours as a group session. If you're going into the partner piece, it's an hour and a half online, and then 3 webinars over the next month to 6 weeks of about 45 minutes to an hour.
Great, thanks, Ollie. If I just come back to you, Joe, quickly. If I was to ask you to summarise 2 or 3 of the real kind of key benefits that you see as a firm now by working closely with Capitalise, what would you say are the 2 or 3 kind of core benefits to partnering with Capitalise?
Well, the main one, the overriding benefit, is that we're able to better service our clients. If a client comes and asks you if you can help them with funding and the answer is no, then it's probably not very helpful. And it enables us to always be able to answer yes, you know, providing the company's in a good state of financial health, one thing or another. I mean, the commission to us is, you know, it's great, and I think as it grows, it can become a revenue stream, but it's definitely secondary to the client service.
Okay, great. So around client service and helping, I suppose, helping deepening that relationship with the client as well, which is kind of which is going to help when you're out there speaking to them and you're helping them with some of these troubles or helping them grow their business, which is great.
Definitely. I mean, I think to drill down in it a little bit, in a little bit more detail. I mean, going back to the point I was talking about earlier, when, you know, if you've got a potential client who's talking about raising money under equity and you're able to illustrate to them that they could actually have debt, you know, that goes the same for an existing client too, obviously.
Okay, great. Thanks, Joe. Brilliant. I can't see any more questions that have come in, guys. That was really helpful, really insightful. Thank you so much for your time today. How can anyone get in touch with you guys should they want to find out a bit more about Capitalise and how they can potentially partner with you?
Sure. So if they kind of jump on our website and they can book a consultation with us, and we'll kind of jump on a half an hour to an hour call with them and kind of show them through the process.
Okay, great. If anybody on the call would like some more information on Capitalise, just put a comment in the box, and we'll make sure that someone reaches out to you. Just big warm thanks for all your time this morning. Hopefully we'll see you all at the Digital Accountancy Show in March. Thanks to Ollie and Joe for your time. Really great insight into working with Capitalise and how it can help clients. Have a great day, everybody, and see you in a few weeks. See you next time. Thank you.
Cool. Thank you very much.
Thank you.